So hi everyone, welcome to this new video. Today we will talk about the risk of selling during a sell-off. In other videos I will explain how to select which stocks are good to build your own portfolio, and then I will also explain when it is good to buy using the dollar cost averaging, and these techniques are proven to be quite effective. But here I will explain via a very operational and practical example why it is risky to sell during a sell-off. Here you see we have an example by JP Morgan that shows that if you had invested, for example, $10,000 in the S&P 500 between January 2001 and December 2020, you would have an annual return of about 7.4% if you were invested the entire time. And we know this 7 to 9% is more or less the compounded annual growth rate you can make with the S&P 500. Now, if you missed the 10 best days, your return would come to 3.3%. Now, if you missed the best 20 days, 0.7%. And now if you miss the best 30 days, you are now into negative territory, minus 1.5. And then if we look at the extreme, you miss now 60 days, so it's only 2 months, you will be at a minus 6.81%. Now, you probably heard the saying that it is better, what's most important is time in the market versus timing the market. So this is really what it exemplifies, and this is what we're going to explain today. You see, we basically here we're saying it's better to stay invested, wait for the wave to pass. And why is that so? The analysis shows, and you can see with the recent days, that this is very important. You see the market is extremely volatile, and in short they tell us that 7 of the best 10 days occurred within the 2 weeks of the 10 worst days. So it means once you have very bad days, there is a high probability that it's going to rebound. It's just technical, it's normal. So if you sell when it's low, the risk is that you will miss out on this correction of the stock going back up. So this is why we really say when it goes down, just wait for it to pass. And if you want to dollar cost average, continue investing in it so that you reduce the average cost of your stock. But this is another story which we'll get into another time. So I know that the market is quite volatile these days. This is just to give you some insight on this. And also remember, this is exactly why it's very important to pick the stocks that you invest in so that when these moments come, you do not panic and you do not have to wonder whether you want or sell your stocks. The test I usually do is when these time come, do I want to sell or buy more? If you want to sell, you did not do your homework properly. You did not do your due diligence. You just went on a wave, tried to hop on the bandwagon and went with the momentum. Everyone was buying it, it was hot, it was up. But now, when the problem comes, what do you do? So the test is, when these time come, do you want to buy more or do you want to sell? If you want to buy more, then I believe that you did your own personal conviction is quite strong, and you will remain there and you will not do the mistake of selling off during the sell-off. So I hope this video was interesting for you. Feel free to leave your comment. Let me know if there are some topics you want to discuss, and follow the channel to be aware of the next videos. Thanks. Have a great day.